The seasonality is coming. What I look at is who's done the research on the S&P 500. I want to know what the futures have been doing and what the displacement might be for the first quarter. And I'm looking for a down displacement. So for me, seasonality is going to start Tuesday, the 18th, and going to go for the end of the month, the end of February. And I'm looking just for a displacement. And I use Moore's research, MORE, and that is basically showing at least going back 5 years, 27 years, 15 years. I've got basic charts, but what I'm really interested in is what's price done on the S&P 500 contracts for the last 5 years. And again, I'm looking for displacement lower. And the reason is we're almost at all-time highs as I speak. So I just wanted to explain my bias, in my opinion. The seasonality is coming and we'll see a displacement lower if price is going to follow history. So let's get to the charts. Weekly chart here is 6146. The time is 5:02 a.m. Eastern. So we just finished the London hunting zone. I like this 3 EMA here at 6120.54. You notice an air gap between where that's at and where price is right now. So that's one thing. The other is we've hit the 9 EMA in 2025 every week. So we've got quite a bit of a distance here from 6073 to where we are at 6146. The other thing I want to point out is the all-time high on the E-mini S&P 500 micro is 6179 right here. Goes back to December and 6179 and change. So that's important to note here that we're just really, this could hit any time this week before we hit down. So I'm not making prediction, but I'm just saying that is buy side liquidity up there resting. And you could say we're already in buy side liquidity because we're broke through prior week's highs, and then January highs were right in the neighborhood, and there's no reason why we couldn't blip up and then go down. So that's what I'm open to seeing for this week, next week. At some point, I'm looking for a setup to go, and the target's going to be the first line in the sand is 6125.5. And once we close below that on at least a daily level, that's going to be important. And if we go intraday only and we tag the 3 EMA and then go for the all-time highs, that could happen too. But I'm marking, again, point of interest, 6125.50. Let's go to the daily chart. So the first thing I want to note is on the left, Bitcoin. Bitcoin's not following script. Notice this narrow range on the daily chart where basically price action is completely constrained, strangled, condensed. So if we're range bound right here, what's happening in the middle chart is the opposite. We're trending up. Notice the blue line 3 EMA. We tagged it. That comes in as 6133. The 9 EMA has got two price bars, two candles above the red, which is 6017, right? And the mid comes in at 6093. And here's my 25.50 right here, this dotted line. So that's the target I'm going for sometime this week. At least I'm thinking Tuesday or Wednesday. And then on the right, we've got upper Bollinger Bands for Friday of last week and where we are right now on the NASDAQ 100. So the strongest is the NASDAQ. Next, second place is the ES. And of course, Bitcoin is arguing, saying, nope, not going to have it. So note it's below Bitcoin, the middle Bollinger Band, while the other two have quite a bit of distance above, especially the NASDAQ 100. So one of these is a line. Either it's going to be the Bitcoin or it's going to be the equity indices, but they can't both be right. So we'll know by the end of the week what the story is. Next chart. Okay, this is one of my favorite charts here. So we've got the RENKO here with Keltner channels. So you can see all this zone right here. We had the low resistance hike up in Friday, and then all this other action in the afternoon, the Monday holiday, and to where we're at right now has been range bound. Again, we talked about that consolidation. Very much, it's been a trend up since middle of last week. And again, this dotted line is that 61.2550 line in the sand. You can see it matches up with the sell side liquidity on these RENKO bars. But the middle of the Keltner comes in at 6111, 6111.50. On the right, 4-hour chart, you see we've got the Keltners on the upper. We hit the uppers on Thursday, Friday, and then we just really, these are 4-hour candle bars, not RENKOs, candles, and you just see the consolidation here, really constricted, range bound above the middle, which is 61.29. Here's the 61.2550 line in sand. You see the wick here goes almost up to the upper Keltner at 61.59. And keep in mind, the record all-time high is right up here at 61.79.75. So we could easily hit that Tuesday in the New York session. But right now, we're just still pretty much in a range-bound auction. And what I'm looking for is a displacement down. And I'm not saying it's happening Tuesday, but because again, we've had this long weekend and New York's not happened to weigh in. So I'm not really interested in the AM session as much as the PM session. And then we'll see if we get the 2550 on Wednesday, Thursday, or will it hit in the PM afternoon on Tuesday? No high expectations here, but I'm just saying that's the marker here after all this consolidation. Next chart. This is the canaries in the coal mine. Dollar, VIX, Treasury. So on the left, you see we do have a green bar. So we'll see how that goes. It's not like it's a lot. 106.93, 92. So we're fluctuating right here. So if the dollar is going back into this rectangle, where is that from? That's the CPI number of December 18th, and that is a fair value gap. And I want to just see if we get back into there. If we can violate that red line sometime this week, that's going to be showing strong dollar. We're going to see a corresponding opposite direction for the stock market if this is trend up. Now the VIX is going up, so we hit this low here in the high 14s, and currently we're mid 15s. So something's up with volatility, and then the Treasury 10-year. That's important because again, another fair value gap right here, same one from December 18th, and this one, you notice this candle wick last Friday, it went below it, but the body of the candle respected. And so now we've got the body of the Tuesday candle going up. Again, higher yields, higher dollar, higher VIX. That's not good for equities seeking out new all-time highs and hanging out for even higher highs. If this continues with these three on a higher note on all three, especially in sequence like this, I definitely am looking for my 2550s to be hit, and then we'll look for some further downside from there. So that's these three. Let's go to the next chart with the markups on the 15 and the 1 minute. Okay, 15 minute on the left, 1 minute on the right. These are naked charts. Down here, you clearly see the 2550 dotted line, and you can see here, what have we got? We don't have a lot of range. So let's show the areas. So this orange tan box rectangle, that is so far the Tuesday hunting zone. So the levels have been the high, the low, and that's a 2 to 5 a.m. Eastern, and we're currently 5:26 a.m. Eastern. And what I'm looking for is to see if price wants to go above 51.75.52 and stay above it, and then break on through to the other side and try to take out the all-time high. That's gonna be important. If we can't do that, if we can't close above 50.61.52, then the new week open gap for the new week is down here, 6138.25 by 6133.75. This purple rectangle right here on the left low on the 15-minute, that is the next thing that price needs to do is it needs to slice through this through butter and go down into this January 27th new week open gap. This is really a large one right here. So the 2550 right here is above the CE of this January 27th fair value gap, and that comes in at 60. So what's got that above that is another new week open gap. So again, all these new week open gaps stacked like this means there's a high probability of this going to be revisited. This is December 16th right here that I'm pointing out right here with the circle. So I just want to make sure we're being very clear with this video on these new week open gaps. So I don't really have ambitious targeting for Tuesday, but if we were to really break later in this week, I'm looking for this 15-minute fair value gap here. This was the February CPI. We had quite the gap here. This is the yellow one right here I'm talking about. So 6091 by 6038, that's giant. And this consequent encroachment of that is 6065. So that would be ideally a weekly target, is that we dig into this yellow, but a lot of business to be done before we get down to that. And so far, we've been hung up in holiday trading, and I think that hangover, the 3-day that traders may have coming into Tuesday, is we won't really see if there's going to be a Tuesday displacement till the afternoon session. So that's my outlook here. I'm going to kind of cut it short because we really do want to see the session after a holiday long weekend is going to be maybe full of, let's just call it fake outs. And I'm thinking right now we're still high resistance, so there's no reason to think we're not until we see a low resistance liquidity run. And that's what I'm looking for. Even if it's higher, that would be fine. Above here is, again, December 9th new week open gap. That's 64 by 66, quite a narrow one. And then above that is the all-time highs from the December 6th all-time high record. Take it slow. First day back after the 3-day weekend. I pointed out the highs, the lows, but my overall bias is that seasonality I mentioned, and that may take a few days to really get momentum and traction. But when it does, for sure, I'm looking for the yellow to be punctured at some point before we get into the March. Aloha and take care. Bye.